You're seeing that fixed assets is a bit of a headache. I thought I'd do another one. And I'm doing this one now for the first time. I haven't seen this question that I know of. So the idea is for you to see how I work with the information, like from the get-go. Like, what do I do when I see a question for the first time? What do I highlight? And yes, just what the basic approach is. If you would like to follow the same approach, obviously you don't have to. You need to figure out what works for you. Okay. So you supply and install different types of solar panels at a fixed price, and you're provided with the information for the financial year ending 30 June 2024. That means that your year started on the 1st of July 2023 for it to end on the 30th of June 2024. Oh my word. The one moment it works and the next moment it just doesn't. Let's try that again. June 2024. Okay, I'm not going to waste more time on that now. Okay. So use the information A and B to calculate the missing figures in the fixed assets note. So you have here the note to the financial statements for 30 June 2024. Right, so you had equipment and vehicles. Remember that cost minus accumulated depreciation is equal to carrying value on day one. Then your cost price plus your additions at cost, so additional assets purchased during the year, minus the disposal at cost is equal to your cost price at year end. Your cumulated depreciation on the first day plus your depreciation movement for the year minus the accumulated depreciation on your disposal is equal to your accumulated depreciation at year end. Then cost at year end minus accumulated depreciation at year end is equal to carrying value at year end. If you need to, rewind and watch that again. Yeah, rewind, old person, yeah. Okay. So we have here the cost of our equipment on the first day and the accumulated depreciation. So the difference being our carrying value on day one. Then it says that we also had additions at cost. And then if we take our costs plus our additions, it gets us to our costs at year end. We didn't have any disposals during the year, so that's why it's that straightforward. Then accumulated depreciation plus your depreciation movement for the year is equal to your accumulated depreciation at year end, but they don't want you to calculate that. They only want you to calculate the depreciation expense on your equipment for the year. Then moving on to your vehicles, they gave you your costs at the beginning of the year, not your accumulated depreciation, but they did give you your carrying value. You know that cost minus accumulated depreciation is equal to carrying value. Therefore, you can also say that cost minus carrying value is equal to depreciation. Then they also want your disposal at carrying value. They gave you your depreciation movement for the year, and then you also have your cost at year end. Let's look at the details regarding our fixed assets. So it says that new equipment was purchased on the 31st of December, and this transaction has been correctly recorded. Depreciation is calculated at 10% per annum on cost. So 10% per annum, oh gosh, on cost. Okay, there we go. Next up, it says that a vehicle was sold for cash on the 31st of March. It was recorded correctly. Okay, so your disposal here, it happened on the 31st of March 2024. and you recorded this correctly. The details was as follows. So you don't know what the cost price is. You do, however, know that the accumulated depreciation on the first day of your current financial year was 66,000. You know that you use the diminishing balance for your depreciation at 20% per annum, and that you made a profit on the sale of the vehicle of 3,350 Rand. Then depreciation on all vehicles was accurately calculated at 98,000. So there we have it, 98 there already recorded. Okay, right. So let's start with our first missing amount, and that is number 1. So that's also the only question, is to calculate the missing figures. So for vehicles, we said it's nice and easy to find that missing figure. Is it the right? Yes, okay, it is the right. Is it the activity 2? I just want to double check. Yes, okay, right. So accumulated depreciation on vehicles, we said cost minus accumulated is equal to carrying. Therefore, we can also say that cost, the 4s don't want to work, right, minus carrying value, 1,9,200, is equal to accumulated depreciation. So 814 minus 519 is equal to our accumulated depreciation of 294,800. Okay? So 294,800 that we have there. So let's write it here. 294,800, because we don't like working with question marks or missing figures. Okay, right. Then we move on to number 2. Number 2 wants us to calculate the depreciation on our equipment, keeping in mind that new equipment was purchased on 31st of December, and then your depreciation is calculated at 10% per annum using the cost price method. Okay, so remember, I prefer doing the split calculation, where I first have my old assets. Oh, my word. I don't know what's going on here. Old, there we go. And new. And the new ones. Okay, and we have to calculate the depreciation at 10% per annum on cost, keeping in mind that my new one was purchased on the 31st of December. So I had for Jan, Feb, March, April, May, June. So for 6 months. So for 6 out of the 12 months, 6 over 12, whereas my old ones I had for the full financial year. Okay, right, so let's go. The cost price of my old ones was 561,000. And depreciation is calculated at 10% on the cost. So let's calculate that one first. So 561 times 10. And that is equal to 56,100. However, my carrying value is 50,000. So I cannot now say that I'm going to write off 56,100 on this asset, because its carrying value is already 50,000 Rand. And I know that the carrying value must always be at least 1 Rand. Therefore, I'm going to say that I can only, so I'm going to limit this, I can only write off depreciation of 49,000. So 49,999 Rand. Okay, so that's the reason for it, because my carrying value is 50,000 and 56,100 is going to result in me having a negative carrying value I'm not allowed to do that. I'm only allowed to write it off until a 1 Rand value. So it's the carrying value minus 1 Rand will then give you the depreciation on that equipment. Okay. Then the new one you had for 6 months in your current financial year, you purchased that at a cost of 55,000 Rand. So 55. There we go. I don't know what I'm doing here. There we go. 55,000. Oh, times 10%. 10%. So 55,000 times 10% for only 6 out of the 12 months. So 2,750. 2,750. So my total depreciation on equipment is the new one plus the old equipment. So 58,850. Okay, I definitely miss writing on an actual board and not this thing. Okay, so there's your depreciation. So it is 58,850. Righto. Now the last one. Please calculate the disposal at carrying value. In other words, calculate the carrying value of the asset that you disposed of on the date of sale. In other words, get the cost of the asset that you now disposed of minus the accumulated depreciation on that asset on the date that you dispose of this asset. So what's nice and easy here with the cost price is they told us that we had no additions at cost. So in other words, cost plus 0, because I had no additions, minus the cost of my disposal will give me my cost price at year end. Because remember, this is basically your T account. So they are saying that this is your vehicles account. Vehicles. And that's why I started off with the basic understanding of your note. So you started with a balance brought down, and that's your 814,000. Then you had your asset disposal. This is now the one that we are trying to calculate. We want to know what was the cost of the asset that we disposed of, because we need to calculate the carrying value. We can't do that without cost. And then when you remove that one afterwards, you ended on a balance of 649,000. Therefore, to get to your cost of your disposal, let me just go down here, cost of the disposal, we're going to say that that is our cost at the beginning of the year, 814. So 814,000 minus our year-end balance of 649. Gosh. Okay. Right. So it's my 418 minus my 649. And that is 165,000. So 165. Maybe I should just write slower than it actually works. Okay, right, so that is my cost. And in order to calculate my carrying value, I now need to calculate my accumulated depreciation on that specific asset, or I need to use other information to be able to calculate that. So it says here that my accumulated depreciation on the first day of the current financial year was 66,000. So I have all the information needed for me to be able to calculate my depreciation from the first day of the current financial year up until the date of disposal. That means that I can calculate my accumulated depreciation on the date of sale. And that's the missing part here. So that's the key information that we need to be able to now finish this calculation on the carrying value. So says that depreciation is calculated using the diminishing balance method. So in other words, oh, I don't have that because I don't have my costs. Okay, see, like I said, I'm also doing this for the first time. Okay, so I can't do that because I don't have my costs at the beginning of the year. And in order to calculate your depreciation, you need cost first of all. And if it's on diminishing balance, it's then minus the accumulated depreciation to find your carrying value. You do not have that, but it's okay because what we do have is we have the accumulated depreciation on the first day of the current financial year. And what we also have is this over here. Oh, we did just calculate the cost. What am I even saying? We did just calculate the cost. Otherwise, I would have just done a T account. But luckily, the blonde is now gone. So 165. I literally forgot what I just calculated. I calculated the cost. And I calculated the cost using the opening balance minus the closing balance. Okay, I'm back. Right. Okay, so 165. So that is my cost. And I can now use that, so cost minus accumulated depreciation to find my carrying value. So it's my 165 minus my accumulated depreciation on the first day. So on the first day of the current financial year, I had a carrying value of 99,000 Rand. Then depreciation is 20%. So times 20%. And then I only dispose of this asset on the 31st of March 2024. So how many months that I own this asset during the current financial year? My financial year started on the 1st of July 2023. So it's July, August, September, October, November, December, Jan, Feb, March. So for 9 months in my current financial year, is that not the same months that we had in the previous one? So times 9 over 12. So in other words, the depreciation that I must still record for the disposal is 14,850. So in other words, on the date of disposal, I had a vehicle with a cost price of 165. Let me not forget again that I calculated that. Minus my accumulated depreciation on the first day, minus my depreciation that I calculated for the current financial year. And that then gives me 84150. Okay, so there we go. That is your carrying value of your disposal. Then, just something interesting, we can now also ask you, please calculate the amount that we received for this vehicle using the information in question 3. So, yeah, please do that. So the information in question 3, meaning the carrying value that you calculated, or then the cost that you had to calculate in order to get to your carrying value. And that would just mean that you have to draw a T account for your asset disposal. So your asset disposal. Asset disposal. Oh, yes. Write slower. Disposal. Then it looks a bit better. Okay. So remember, the first step in your asset disposal is to transfer the cost of your asset. In this case, it was a vehicle. So transfer the cost of your asset to the asset disposal account, 165. Right? Then once you are done with that, calculate and record the current year's depreciation on that asset. Here we have it, the 14,850. Once you have that, add that to your accumulated depreciation on that asset on the first day of the current financial year. So 66,000 plus 14,850. So there we have it, 80,850. Take that and transfer that to your asset disposal account. So accumulated depreciation on vehicles. Remember, this is now just a draft account, so I'm not writing everything out. Okay, there we go. Then how? Let's assume that we sold this for cash. So we'll just say bank. And this is now what I asked you to calculate. Please calculate the amount that we received when we now dispose of this asset. So that's a question mark for now. Then it says that you made a profit on the sale of this vehicle. So what you paid for it is less than the usage that you got out of it. Therefore, on the debit side, profit. So I got more out of it, 3,350. And then you just balance the account to find the missing figures. So on the debit side, that's your total minus what I have on the credit side. So I received for this asset 87,500. So just an additional little something if they maybe decide to ask you that.